Hi friends, and welcome to the episode where we yet again review my stock portfolio. Here on the screen you can see the last review I have done, which was 6th of November 2023, so in November last year during the winter, and this is how my portfolio looked back then. Just wanted to show you, so it's better for those who don't remember or who haven't seen my winter portfolio update. It's easier for you to follow then to my spring portfolio update now once you see what changes I have made to my stock portfolio. First of all, let me say that overall performance since I started investing in 2018, plus 42, it was in November. S&P 500 index was not too far away from me during the same period of time, 57% on the plus side, and an index investor with monthly additions in Standard & Poor's 500 with dividends reinvested was up plus 31%. So let me highlight first to you that I was 11% ahead of that your typical index investor, which I think is a pretty good result at the time. I'm mentioning this to you because when we go to this day, how the situation is now, we can see a clear change in this one. So keep these numbers in mind as we soon check the spring portfolio, my current portfolio. But still talking about this portfolio I had in November, biggest change I have made, one big change has happened since, and that is my selling of GEO Group position completely. So that one I have sold out completely, and obviously that affects all the percentages you're going to see next. So that is the background. As we can see, plus 42, and now we move to this day when I'm filming this 6th of March 2024, and here you can now see on your screen my portfolio as it stands today. So I was up 42% and now I'm up plus 50%, which is obviously nice. It's not a stellar performance, but hey, this is value investing and we go risk first in many cases. So since I started investing myself in 2018, I have done plus 50%. My portfolio has done during that time. That compares now to S&P 500 with dividends reinvested, which is up hugely, plus 96%. And the index investor who invests every month the same amount of money into Standard & Poor's 500 with dividends reinvested is up plus 48%. So they have almost catched me up and my performance, which is obviously kind of devastating to make a joke here to myself. Like, yeah, I have been doing stock picking all this time since 2018, and I am only 2% better than your average index investor in S&P 500, but I would like to highlight here first that I'm still ahead of this index investor, and what I can say, or my feeling, is that as we have seen, I'm gonna show you now on the screen, S&P 500 is making new highs as we speak. You have Bitcoin, which has bounced back to all-time highs. Then you have your other cryptos, which I don't even know what all of these are. They are clearly, if you look at their year-on-year performance, it has been stellar. And overall, when I listen to other investors talking about this, specifically S&P 500, we all know the stories with Nvidia and the mega tech companies we have there leading the way in S&P 500, and which account for the most part this great performance we have seen with S&P 500 during the beginning of 2024 especially. Yeah, I would say things are looking pretty expensive in S&P 500. I know I have been saying this also, I remember probably when I did the winter portfolio update, which I just showed you, but again, I am led to think that markets are getting pretty hot when you see Bitcoin doing all-time highs again. All the crypto bros that have been hiding for almost 2 years, I don't know under which rock, they have now climbed out from the bottom of that rock. And if I check my social media feed on X, there is crypto bros are back, so back, and I have seen some meme stocks being back again, and everything is eerily similar to 2 years to the times 2 years ago when we had our little market very small crash that we had. And to me, everything is just seeming pretty hot at the moment when you look at these asset classes I just mentioned. Well, nevertheless, I am a value investor. I know this is how the game goes sometimes. Sometimes you need to be really patient to see first time when you outperform index investors. I thought I did already last winter, but as we just saw, the index investor has catched up on me, so I'm not outperforming them anymore. But these are the times when your conviction is tested as a value investor, when fear of missing out, FOMO, hits you with Nvidia's and S&P 500 that is invincible. Nobody can beat the index investor. These are the times, and this is the time when I need to keep my head cool, like we always do here at Arctic Money, and trust the process I have. Know that value investing takes patience, a great deal of it, and there is this saying that goes that markets can stay irrational far more longer than you can stay solvent yourself. So obviously this requires patience, and I'm only thinking of people who think, or like I thought that S&P 500 has been overvalued for quite some time, but I haven't been shorting it because shorting is something I don't want to do myself. I never short, never have and never will. That's just my decision. And I can believe that people who shorted S&P 500 and the mega tech companies, they have been burned pretty badly this year, 2024. So markets are irrational, and these are the times when fear of missing out, FOMO, hits you as a value investor, and you question yourself. And of course I do question myself, but to be honest, I don't question myself. I have great conviction in my portfolio how it is. Index investor has catched me up now, but I'm pretty confident I will leave that index investor behind soon again and continue chasing the returns of S&P 500 index itself, which has, as we all investors know, has been the hottest index to investing along with Nasdaq. United States overall, it has been the hottest last 6 years I have been investing, and actually it has been the hottest almost last 15 years in the world. So there probably weren't too many better asset classes to invest in than S&P 500 or Nasdaq during the last 15 years. But that was last 15 years, and now you ask yourself, will this be also the next 15 years? My answer and my guess is no, because I'm doing stock picking and my portfolio is not too much actually correlated with S&P 500 anymore. I would say, even though I have a strong correlation to it, obviously, the names you see now in my portfolio, they are not your typical top names of S&P 500. But let's get on to the portfolio now. Or before that, I have excluded cash because cash position is something so personal to every investor's specific situation in life. So I have excluded it from this pie chart, and I don't tell you every buy or sell I do at the moment. I don't think me telling how much cash I have available for investing is useful for anyone, because that amount changes all the time. As I said, it's so personal thing that everyone needs to know their own cash position and how big that should be. But what I can say just overall about my cash position is that now that I have sold out of GEO Group, my cash position is very okay. If markets were to drop 25% tomorrow, I would be happy for it. I would have cash to deploy. I have targets on my watch list. I would be extremely well prepared, in my own opinion, to the market crash that would happen if it started tomorrow. I would be prepared myself, and that's what value investor needs to be every time. So let's quickly go through my portfolio. Let me just present it to you. Right now I have 21% in Sprott Physical Uranium Trust, so I'm still holding on to my physical uranium. Second biggest position is Flow Traders, 14%. Flow Traders is a liquidity provider that should do well should there be a huge volatility and panic in the market. So I'm not sure if this is how it will go, but I would hope that should there be a big panic in the market, I would see my Flow Traders position probably going up. And if it goes up so much that I think it's overvalued, I will take that cash out, sell the position, and use that cash to everything else that probably and most likely has been crashing in my portfolio and on my watch list. Flow Traders, liquidity provider, it's interesting business, interesting play. Go watch my video on Flow Traders if you're interested in that more. I won't go more deep into it now. Then 11% Core Civic, so GEO Group, their competitor, I sold. But I'm still holding on to other private present operator, Core Civic, which is a big part of my portfolio still. After doing valuations, updating valuations of those two, I just felt that there's more upside to Core Civic left, and GEO Group's upside started to become small, and the risk levels started to go up with that stock. So this was my decision. Now I have only Core Civic in my portfolio, and I'm fine with that for now. Carriage Services, 10%. That's a funeral home cemetery operator in the US. I have been accumulating that position, and at 10% I'm comfortable with it. Alibaba, of course, used to be a huge position in my portfolio, but after seeing big stock decline for many years already, now it has become a little bit smaller, and I have also cut it down little bit because even though I'm bullish on China, bullish on Alibaba, obviously because it's in my portfolio, there are geopolitical risks related to China, and most likely Alibaba will do good, and I hope world will stay rational in that part of the world in Asia, and nothing bad happens like it's happening in Europe now. But still, there is geopolitical risk, and it's something I'm comfortable having in my portfolio, 10%, but not more at the moment. I used to be younger, I used to be more reckless, and I used to have a bigger position in Alibaba. As said, it has become smaller now due to decline in the stock price throughout these few years, and I have also slashed it a little bit, but not much. Let's see. Still, if Alibaba was a company in any other part of the world, it would be valued much higher than it is today. That one I can say for sure. Then Eurofins, I have been growing that position. That's a laboratory services provider from Europe, operates globally. I think it is fairly valued, and I have been buying a little bit more stock of it recently. Then we have again uranium ETF. So as you can see, uranium is my biggest bet still. I just little bit, when spot price of uranium went over 100, I little bit slashed my position, but not much. Took home some profits, but as you can see, it's still a huge part of my portfolio. So I do have conviction in the price, spot price moving up again, even more from these levels we are right now. Tyson Foods, meat company from United States, 5%. Amsterdam Commodities, trading business of all food related. You have their spices, you have their nuts, you have their tea, these kinds of products they trade. And really stable business I have been growing in my portfolio too. Fairly valued businesses, Tyson Foods, Amsterdam Commodities, at least in my opinion. Should we see stock declines in any of these without any major things changing in the underlying businesses, I will be adding more. Then a new position actually from after winter, which I bought. Dr. Martens, boots manufacturer from UK, went to 80 pence per share. That seemed to be the bottom for the stock for at least a little while, and I was lucky to buy my first batch of the stock. Then we actually went almost back to £1, and now we're back again at some 90 pence levels, but still it's on the green side for me. And actually I would have hoped this to go to like 70 pence per share, even more down from my first buy, so that I could have accumulated more of it to my portfolio. So I wouldn't be sad to see this stock declining. I do feel this is a good company to invest in, and I like Dr. Martens, so I'm looking that stock too. And then another new buy, which I did this week, Alphabet, so Google 3%. I decided to open again. Google has been in my portfolio before. I have sold it every time on green side, winning side, but now this probably is the highest level I have ever bought Google with. The share price at the highest level, but in relation to Google, I have a really long buying program reserved for it, and should we see Google moving down, I will buy more, but if it doesn't go down from these levels, I'm unlikely to add more to it now. And then finally, Park Lawn Corporation, another funeral home cemetery operator from Canada and United States, competitor of Carriage Services that actually tried to buy Carriage Services already. And that's why Carriage Services stock price went hugely up and then came hugely down when when Park Lawn Corporation, for reasons I don't think anyone knows because they are not public, withdrew their offer, so they were not interested to buy Carriage Services anymore. Still, as you can see, I have two companies from the same industry there, so I'm long-term bullish with both of these companies actually, and we'll be monitoring those. But as said, this is my portfolio now. This is how my portfolio looks spring 2024, and this is how we approach the summer. As said, just looking at the performance, of course you hope it would be bigger, but I approach things with risk first, so I will not probably have Nvidia-like performance ever in my portfolio. I try to follow the footsteps of Warren Buffett and other greats. To get rich slowly is my strategy and my aim. And hey, plus 50% is still plus 50%. It's heavily on the green side, so happy for that. And when you look at compare still with the S&P index investor who has catched up on me, I'm a little bit sad about that. Don't have a big lead in that competition anymore, and as I already said, huge gains with S&P 500 during since 2018, or almost double, 2x, and yeah, let's see. This is how it goes now. In the winter, I was doing much better compared to the index investor. This is the situation now, but as said, fear of missing out is terrible fear, and I fight that fear myself, and I'm not going to do it. I stay loyal to the strategy I have, and I believe in the portfolio I have here right now in front of me. Let me know in the comment section below, what do you think of my portfolio? Which companies do you own, and what is there in your portfolio? If someone would be willing to share, that would be great. And if you're interested in my stock analysis, my portfolio update videos, which I try to do like probably four update videos a year, that seems reasonable. Hit the subscribe button, and so you won't miss any of these videos. I thank you for watching this longish video, and like the video if you learned something, and thanks for watching. I see you in the next one. Bye bye.